Good evening. My name is Anika Sharma, a group member of Combined Was Group 28. I did the business charter in the financial accounting project, so I'm going to elaborate on that now. So the name of a business was Kulche, Kukkad or Kulhad, and it was a hybrid business since we offered both products and services. The three major products that we sold were Chole Kulche, Chicken Kulche and Lassi. The Lassi was offered in three different flavors, mango, rose and regular. And we also offered services like delivering the food to the cabins of the professors who ordered and wanted the food delivered in their cabins. The total capital infused in our business was 13,579 rupees, and the first infusion was made on 13th March 2025, and this after exhaustion it was again infused on 20th March 2025. The total cost was broken down into fixed costs and variable cost. So our total fixed cost was 6,590 rupees, and it included all the fixed operating costs like rent, utensils and etc. And our total variable cost was 6,989 rupees, and this covered all the costs that were varying depending on the production and the sales of the stall, like raw materials, etc. We had so the sources were the 9 members of the CWAS 28, and each member contributed 1,098 rupees, and the 3,700 that was mentioned in the fixed cost at the stall rent was imaginary. We had assets like refrigerator, stall, inductions, utensils, etc. and inventory. So I segregated the inventory based on the three major products, and I mentioned the raw materials, the work in progress and the finished goods for all three of them. So the business collected revenue strictly on cash basis, wherein customers purchased coupons from the college in exchange of cash. And so our business followed a coupon based revenue recognition model. So customers purchased coupons from the college, which were then used to buy food and beverages from a stall, and revenue was recognized when these coupons were redeemed at a stall, as this was the point of service delivery. Thank you.
Hello, my name is Cynthia. I am a part of Combined Was Group E7 and 8, and I'll be discussing the business plan that we came up with for our stall. So, giving you an overview, the stall sells freshly made chole kulches, chicken kulches, and 3 flavors of lassi. So, we focused on delivering affordable, delicious, and high quality meals in a quick service format. So looking into what sets us really apart from others was our chicken kulche. It's a first of a kind fusion that adds a non-vegetarian twist to the classic chole kulche dish. So this catered both to vegetarians as well as meat lovers, making us stand out a lot more in the street food scene. Talking about the market opportunity, we operate in the street food sector and quick service restaurant sector, where demand for flavorful and affordable meals continue to rise. So our target customers here were the students, our faculty and the staff. Now, moving on to a little bit of the pricing and our business goals. We kept the prices affordable because of our target audience. So, chole kulches were set at 60 rupees and the chicken kulches were set at 80 rupees and the lassis were starting at 20. We also served combos so as to attract more customers. So, this helped us ensure profitability as well. So, our goal was to achieve a daily revenue of 12,000 so that we can cover operational costs and drive sustainable growth. So, talking about promotion and marketing, we attracted customers through word of mouth and strategic stall placements and social media marketing. So initially, we estimated a footfall of around 100 with an expected 80% conversion rate, which means basically 80 customers. However, we surpassed the expectations, achieving around 150 footfalls with a 90% conversion rate. So almost 135 customers. So this strong demand highlights a lot of potential for future growth.
Hello, my name is Vedika, and in this section I will be talking about the journal entries and how we recorded them for our business operations. The journal is the first step in our accounting process, where we systematically record each and every financial transactions in chronological order. This ensures accuracy and allows us to track every business activity as it happens. So let's go over some key transactions that we recorded in the business. So the first key transaction would be capital introduction. To begin our operations, we introduced capital in both cash and bank form. So we debited the bank or cash, whatever it is, according to the transaction that we made. So the second key transaction would be rental expenses. So throughout the fest, we incurred rental expenses for essential items such as stall, refrigerator, utensils, and induction stove. So these were recorded as debits under rental expenses with payments made via bank or cash, and the accounts were credited accordingly. The third key transaction would be inventory purchases. So inventories were a crucial part of our business as we sold chole kulche and lassi in coolers. Our inventory included items such as curd, chole, kulhad, kulche, masala, and other ingredients. So every purchase was recorded by debiting the inventory account and crediting either bank or cash, depending on the payment method. The fourth key transaction would be operating expenses, which are fuel and travel. So we also accounted for expenses such as fuel and travel. These were recorded by debiting fuel and travel expenses while crediting cash or bank, whatever it is. So fifth and the last key transaction that I will be talking about is sales transaction and cost of goods sold. So for every sale, we recorded revenue under sales, and at the same time, we tracked the cost of goods sold by debiting the cost of goods sold account and crediting inventory, ensuring that our stock level were accurately reflected. So, by maintaining journal entries in chronological order, we created a clear financial record of our transactions. So, these entries were later transferred to the journal ledger, and which helps us to prepare trial balance and financial statements. Thank you.
Everyone, I am Vadi and I was responsible for preparing the ledger. The ledger is the main book of accounts where we categorize and summarize all financial statements from the journal. It helps us in tracking our financial positions and preparing the trial balance and financial statements. So, ledger has two sides, debit and credit. Transactions from the journal are posted to their respective ledger accounts in a structured manner, allowing us to track balances efficiently. So the first account that I want to talk about is cash and bank account. So these accounts are asset accounts, and these accounts will help us tracking all cash inflows and outflows. Every time we receive cash, we will record it on the debit side, and every time we make a payment, we will record it on the credit side of the account. The next account that I want to talk about is capital account. So the capital account is kind of a liability account, since capital is a liability for a business towards its owner. So whenever we will induce a capital, we will record it on the credit side, and whenever we will draw something, then we will record it on the debit side. Next account that I want to talk about is rental expenses. So for rental expenses, we had stall rental expenses, refrigerator, utensils, and inductions. And whenever the payments were made for these expenses, it was recorded on the debit side of the account, and it was debited by cash account. The next expense we have fuel and traveling expense, same entry as the above one. And then we had marketing expenses. The next ledger I want to talk about is inventory and COGS. The inventory account tracked our stock purchases and usage. Purchases were recorded in the debit side, increasing inventory, while reduction due to the sales were recorded on the credit side. To account for inventory consumption, the corresponding amount was recorded to the COGS under the debit side, reflecting the cost incurred for the goods sold. So the next account is sales ledger, which is a revenue account. So the balance will be credit balance. So whenever we will record something, we will put it on the credit side of the account. And we subdivided the sales account into faculty and students account, so that we will know how much revenue we got from the faculty and how much revenue we got from the students. And the last account that I want to talk about is the coupon account. So the coupon account is kind of a accounts receivable account, because we did not get any cash by selling the product. Instead, we got the coupon, and we will get the cash in near future. That's why the coupon account uh, is an asset, and whenever we got a coupon, we record it on the debit side of the account.
Hello everyone, myself Keshav Agarwal and I will be explaining the trial balance of our stall Kulche, Kukkad and Kullad on the day of EcoFest. So the total of debit and the credit side of our trial balance is 27,939 rupees, which confirms that our records are well balanced. So now let's talk about our earnings. Our total revenue for the day was 14,360 rupees, which includes faculty revenue of 5,000 rupees and students revenue of 9,360 rupees. Now let's talk about our average expenses that we incurred for the smooth running of our stall. It includes rental cost for the stall, utensils and equipment totaling to 5,940 rupees. Fuel and travel expenses were 703 rupees. Marketing expenses were 270 rupees, and the COGS, which is cost of goods sold, which includes the raw materials we used, was 6,276 rupees. These expenses are essential for understanding our total cost and ensuring profitability. Additionally, we had 14,360 recorded as an asset from coupon payments, meaning many customers paid using coupons. Our initial capital investment to set up the stall was 13,579 rupees. In conclusion, our revenue, expenses and assets were well tracked and our account balanced correctly at 27,939 rupees. Thank you.
Hello everyone. Today I'll explain how our food stall Kulche, Kukkad, Kullad performed financially during the EcoFest. Let's focus on retained profit, the money we earned after covering all costs. Retained earning is like final score of a game. It's what's left after subtracting expenses from revenue. For our one-day stall, this tells us how successful we were. Here's the quick math. Total revenue was 14,360 from selling kulche, chole and lassi, and total expenses was 13,119 including rent, ingredients, fuel and advertisement. Profit after tax was 1,241. What does this mean? We made profit despite unexpected demand. We earned 1,241 more than we spent. Big expenses like rent, which was 5,870, and fuel 450 were managed well. High sales 14,000, which was 14,360, shows our food was a hit. Since this was a single day fest, retained profit isn't for reinvestment. Instead, it's a reward for our hard work. It could go to celebrating the team's efforts, saving for future events. This 1,241 isn't just a number, it's a proof that planning and teamwork paid off. From managing inventory storage to serving 150 customers, we nailed it. Thank you.
Hello, my name is Rishika Sinha and I'll be explaining the balance sheet of our business Kulche, Kukkad and Kullad. A balance sheet shows what a business owns or what it owes and its overall financial position. First, our assets. At the end of EcoFest, we had total assets worth 8,844 including 1,084 in cash, 7,330 in coupons from faculty and students and 430 yet to be collected from the faculty. Next, our liabilities. We had no outstanding liabilities, meaning all our expenses like ingredient costs, stall setup and equipment rentals were fully paid. Next, final, our equity. Our total equity stood at rupees 9,000, representing the capital and the retained earnings after covering all the costs. In short, we managed our finances efficiently, had no debts and ended up with a profitable outcome. Thank you.
So, hi, I am Himanshu, a member of Combined Working Group E7E8. Primarily, I worked on assigning tasks to everybody. I delegated every work according to the skill set of everyone, and I gave them deadlines and all so that the work is completed on time. Further, Anika, a member of my CWG, helped in this. She participated along with me in leading the group. Further, I also worked in accountancy side, in which I basically worked upon inventory management system, how to record all the inventory, and further I used FIFO in perpetual method. So as our basically our the items we sold, the goods we sold were perishable, so we used FIFO, and I recorded all the transaction on hourly basis so that we are aware of the inventory left with us. Yeah.
Hello everyone, now we'll move towards the income statement of our business, Kulche, Kukkad and Kullad. So let's start with the total income. Our revenue from the sale of goods and services was rupees 14,360 rupees. Since there were no other operating income or additional incomes, our total income remains 14,360 rupees. Now moving on to the expenses, the cost of goods sold was rupees 6,276 and the traveling expenses amounted to 253 while advertisement expenses were 270 rupees. My major expense was rent, which costed rupees 5,870, which included our rent of stall, our vehicle, and also refrigerator, also induction and utensils. We also had fuel expenses of 450 rupees. Since there were no employee costs, so adding up all these costs, our total operating expenses amounted to rupees 13,119. For the calculation of our profit, our earnings before interest, tax, depreciation, and amortization was calculated as total income minus operating expenses, which gives us rupees 1241. Since there were no depreciations or finance costs, our earnings before interest and tax remains 1241. With no taxes applicable, profit before tax and profit after tax both stand at rupees 1241 itself. To conclude, our business earned a net profit of 1241 rupees after covering all operating expenses. This reflects a positive outcome for the period and highlights effective cost management.